In a widely telegraphed and anticipated move, the Federal Open Market Committee of the United States Federal Reserve said Wednesday that it will lift the Fed's funds rate by a quarter percentage point to a range of quarter to half % from the current 0 to quarter %. This is the first time since December 2018 that the central bank is lifting its benchmark rate. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher energy prices, and broader price pressures. The Fed said in a statement, the implications for the U.S. economy are highly uncertain, but in the near term, the invasion and related events are likely to create additional upward pressure on inflation and weigh on economic activity. The central bank also announced that it will reduce its balance sheet at a coming meeting, not specifying whether it will happen at the next meeting in May. The widely tracked consumer price index accelerated to a new four-decade high of 7.9% in February, with many economists predicting that it still hasn't peaked yet. And on Tuesday, the U.S. Labor Department reported that the producer price index rose 10% in February to an all-high time. Crypto traders are closely watching the Fed's policy statement as the outlook for what could be a prolonged series of rate hikes or balance sheet reductions or both has this cycle proven to be a headwind for central asset prices, particularly for the price of Bitcoin. I'd say that the market is not going to react to the rate hike, but will likely react to the very sharply to anything said in the statement, or more likely the press conference that indicates a change in the quantitative easing exit schedule or the start of quantitative tightening, said Bob Piacino, chief strategist at Path Trading Partners and co-portfolio manager at Stock think tank. Equity markets do not tend to suffer all that often or all that much during rate hike cycles. And since the Bitcoin-Nasdaq correlations is still holding very strong, I would expect the same thing for cryptocurrencies in general, Yachino said. Bitcoin was trading below 40,000 mark after the decision, still within range of Asia hour swings. Wall Street analysts have varied outlooks for the scope of just begun tightening cycle, but the consensus is for roughly 7 25-point rate hikes over the next year. As for the markets, traders will likely be watching whether the Fed's comments will be dovish or hawkish, two terms used to describe an either cautious or more aggressive path ahead by Fed. The CME Fed Watch tool shows that the traders are split evenly over whether the central bank will go with a 25 or 50 basic point increase at its meeting in May, which could bring the rate as high as 1%. Alongside this afternoon's policy decisions and statements, the Fed also released its quarterly economic projections and its dot plot, showing expectations for the Fed funds rate. The median expectations is now 725 basic point hikes for 2022, which would bring the funds rate up to 2.8. That would be 100 basic points more higher than anticipated 3 months ago. The long-run neutral rate is seen at 2.4. Committee members are also predicting much lower GDP growth, now seen at 2.8 growth, down from 4% in the December forecast. Coming up is Fed Chairman Jerome Powell's post-meeting press conference. I'll be watching for any mentions of the war in Ukraine affecting the future path of the global economy and subsequently the path of policy normalization at the Fed, Yachino said. At Powell's testimony before the U.S. Senate, he was very direct in saying that he needed to fend off this race in inflation. I will be looking to see if that has changed at all. Since it has, the market will react.